Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for November 21st, 2016. I'm Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES right now. You see that prices have mainly stayed within 2144 to 2190 zone, so it's been basically about a 45 handle range over the last 2 weeks or so after the big election day move. Obviously, and we're sitting right up here near all-time highs. 2191.5 is the all-time highs from back here somewhere, and right now we're just kind of sitting in this zone. It's really difficult for buyers with new positions to come in at these levels. I think bulls would much rather a pullback and a defense opportunity, but what gets price above 2190 is all the bears up here that have been defending for multiple days and not getting paid. So that's something to keep in mind. Above 2190 could squeeze this thing very, very quickly into the next targets above 2214s, and then you have 2240 to 2233. Those are the next upside targets here. So if price can find acceptance above 2190, there could be more upside ahead. Keep in mind it is a holiday shortened week, Thanksgiving holiday here in the United States. So Thursday is a holiday day. I believe Wednesday is probably an early session day or one of these days. So check it on the calendar, but basically lower volatility, lower volume, but that doesn't mean we can't move. Sometimes it can just be a quiet push higher, never sell a bull market type of trending move. In order for this thing to rotate lower, you have to see rejection above 2190, and you have to see price start to push back below 2175s. That would get this thing going. But right now, very difficult to sell this market, very difficult to buy this market. So you really have to pick your spots, be patient, and trade the holiday session with great discipline, because this week could get you into a lot of trades that just don't really materialize. So you got to pick your spots and be disciplined about your trading opportunities. Let's take a look at the intraday time frame here. Here's the intraday for the ES. Basically, you see here that price so far in the overnight session has been bid below the previous week's close price. That's 21.80 in the quarter. So far, price pushed below it and immediately bid up. When price came back below it again, it was bid up and then again pushed to new highs. So right now, that's a mildly bullish move right there. Obviously, you have a trading range that's already coming in from there. So you have a very balanced range here already forming to begin the day. So it's a fade new highs, fade new lows type of day with an upward bias. So any pullbacks probably into below the previous week's close and into support 2178 could be a buying opportunity for a push to new highs. Right now, any rejections above the previous week's high price right here. So any push up here and a failure could easily lead to a return back to 5-day VPOC, which is 2179. So right now, this is the range, but because of the upward sloping bias, just know that at some point we'll likely push to the upside and break to high. So you have to be more careful if you're selling up here. You have to kind of pound it if you're buying it down here, because bulls do have a shot to squeeze. All right, let's take a look at crude oil. Crude oil with a big reversal here that has kind of broken the pattern we were talking about last week. So last week, especially in the trading room, we were talking about this rejection here below 43s leading to a push up toward 48s. But once this rejection day formed here and we started to see bears defend, the implication was that we probably come back across the range. But Friday, something that we talk about at PivotBoss Masters is that if price closes above the midpoint of that rejection day, the trade is pretty much off. And now you're likely going to gun for a squeeze. So that's one thing. And every time we have a rejection day like this, if we believe that this thing might head lower, bears need to defend that midpoint of the rejection day. Any close at or above it kills the trade, and then you likely see this happen. So right now we're still pushing for 48s. A little blip here. They held 45s very nicely. So we're still in an upward price discovery phase. We'll see how 48 and 48.30 how price reacts to those levels when tested, because those two are the next two upside key levels to watch. Let's take a look at the intraday time frame here. And then intraday basis, one thing you'll notice here It's been an uptrending market. You see a upward sloping VWAP. You see prices now outside of R3 with an LVN here after breaking through new highs. So bulls will want to defend R3 and the LVN here for a shot at continuing this thing higher. You can also pull up your pivot-based EMAs. I call it the PIMA method here, and bring it up in an intraday time frame. So just say if you're in a tick chart or volume bar chart, it's a stacked and sloped, right? So you should be looking to defend pullbacks at your trigger zones on the way up until that pattern fails. LVNs also to be defended. So right now an uptrending market, so you look to use your trending tools. Any failure to hold above this LVN right here could be the beginning of what materializes into a trading range day. So look for further trending behavior until we find a range to develop. Okay, let's take a look here at gold futures. Here's gold. Here's a higher time frame of gold. Now we knew that we might have more weakness into 1200. We talked about these lows right here and that 1233 level. We mentioned that bears are defending 1230 to 33 for a continuation to 1200. I said any squeeze above 33 likely gets this thing going higher. And instead of squeezing, they slammed it again. They got within a point or so of that 1200, and then now you see a little bit of a bounce. But I'm still not convinced that this thing is ready to lift yet. We've seen a problem with gold ever since we got back here in June, July, that every time it's gone higher, every time it's bounced, it's either rejected or found lower highs. It really has not had, it needs a much bigger rejection signature than what we're seeing now. And I believe that still price probably needs to test down below into 1180 to 1200, in this zone, because this is really where price has not been all year long. Once we got above it, we haven't really tested it. So this would be where real buyers would want to come in and really defend. And right now we're not seeing the rejection just yet. Obviously, we've seen a bounce off of 1200 for 20 points, but we're talking about the next 100, 120, 130 point move. So right now, I still believe that there could be more weakness ahead. Even if we do bounce higher, bears need to keep 1240 offered, and that would still provide an opportunity for a push lower. So we're looking for rejection down below for a shot at returning it back up toward these values at some point. But right now, we need to be patient and watch for the rejection signature, and I believe more downside is likely to occur. Here's the NQ. The NQ in the higher time frame right now shows that price continues to drop in the middle portion of that expanding range that we've been talking about, this large expanding range that we've been in. We're right in the middle of that range right now, and it's not the best, not the easiest trade. What I did mention Friday pre-market was that if we get into 48.40, that's probably a fade, right? And if we get into 47.80, it's probably a buy. And then we were also looking at the midpoint. So we had a lot of areas to watch, and they both stayed within that range. But right now, we could see more of that. If there's any failure to hold 4,800, we could auction all the way back to 4,690. That's the range right now. Holding at this area could be the next several days as we trade around it, but acceptance above 48.40 would open up a move to test these previous highs or create new highs. So right now, we're kind of in a choppy zone, very difficult to judge. But if there's any failure to hold 4,800, we could auction all the way back toward 46.90. So that's the swing look there. Let's take a look at the intraday time frame. Here's the intraday right here. And so far what you see is very similar to the ES, that bulls are defending prices below the previous week's close price, which is short-term bullish. When that happens, it typically implies a test of the previous week's high, that's 48.40. So look for price to generally push toward 48.40. If we get into 48.35 to 48.45, in this zone, we could begin to see prices tilt back toward the downside and come back toward 4,800 to 48.10, right? So right now, I believe that as long as 4,800 remains bid, we're likely going to trade in this range. You likely look to fade the edges until proven otherwise. Should we fail to hold 4,800 and see acceptance, we could be looking at much more trending weakness ahead. But at the moment, be careful. Holiday shortened week, you got to pick your spots and be disciplined with your trading, and obviously always mind your risk. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.